Hello, insiders, and welcome back. Today, I want to talk about BEAT Heartbeat Inc. Because this ticker really took me for a ride. And I'll talk about what happened, what I've been doing, and why this ticker, because I'm a bit of a hyper scalper. I also swing trade, but this one was one of those that, fell on my radar in terms of my screener as a top gainer. And I was like, this is overnight hold potential. So I'll talk about why, and I'll talk about maybe, potential re-entry points. I don't know if it's for me because I've already sold and it's hard to re-enter psychologically, especially on small caps, but here we go. So the best place to start is typically get your bearings, right? On a chart like this, you want to start on, let's say, a weekly or a monthly, depending on how big the chart is, and map out some zones and then work your way in. I don't think we're going to have to work our way in too much, but we'll see. So, for example, here, 550, there's probably a lot of support and resistance. We had some peaks in this area, and we have some lows right around like 115. But since the price is so much higher, let's just, start a little bit higher than that. So here's a good little pivot zone. You can see some support and resistance in this area. We'll just keep working our, wrong hotkey, our way up here. And here you can see a big sell-off and a bounce. So let's put something right around here. That looks good because we had retests there. And then probably at the high of this bounce, something in that area. So here's some really key zones on a weekly chart. And now let's go down to the daily chart. And on the 10th of December is when I traded this puppy. So let's talk about why I traded this puppy and what I did, and then maybe what we will do. So I made a little post here so I don't get off track because I like to rant. So here's 5 critical bullet points that every investor should know about this ticker. Now, it's not, I wouldn't call myself an investor on a small cap. I almost never invest in small caps, but I do trade and trend follow them. So let's see here. This is what caught my eye. So it is a regulatory anomaly just occurred on December 10th. That's the day we traded. Heartbeat, or Heartbeam, I keep saying Heartbeat, received a FDA 510K clearance for its 10-lead synthesis software, successfully overturning a rejection NSE letter. NSE stands for not substantially equivalent. So they were trying to come up with a heart monitor that should replace some much bigger equipment, and the FDA said, nope, that does not look good, and they actually overturned that letter in less than 30 days, which is a rare feat, and it triggered a huge rally. So unlike Apple Watches or Fitbits, which are single lead and can only detect rhythm AFib, so if your heart's having weird rhythms, Heartbeam uses vector technology to synthesize a hospital-grade 12-lead ECG from credit card-sized device. It's actually pretty insane, and it would definitely revolutionize the industry, not to mention cardiovascular disease is one of the top 3 killers in the United States, and I think even globally, but I would have to double check that. So this would be huge, right? It's a huge theme, and that's what got me excited. I saw the theme, and I was like, boom, that's what I want to see. If I see tickers, especially small caps, that have a large partnership in something right now, like, I don't know, they're building out, let's say, AI factories in terms of data centers, right? So they are supplying all the parts of data centers. Now, that is a small cap that I would like to probably ride for several days. It has a big theme behind it that people could just understand. This is a classic example of a big theme. Now let's learn a little bit more about this product quickly. So right here, unique tech moat, unlike Apple Watches or Fitbits, which are single lead. I think I was saying lead earlier, single lead, and can only detect rhythm. 12, I already read that. So here we go. Despite the rally, the company is financially fragile. As of September 30th, only had $2 million in cash. That is, guys, that is nothing. Let's see, in cash against a 3.2 million quarterly burn. So they are hanging on to a thin thread, a lifeline. So, a month or two of support there. So making it basically, this stock is going to zero, which now you can basically assume they're going to be selling a lot of capital or a lot of equity, a lot of stock into the market at these higher prices. So that's why, again, I wouldn't be a long-term investor in a company that's not making any money, which is great for the company, bad for anyone holding it. So the holy grail potential, while currently clearing the arrhythmia, the company's long-term value lies in the potential to detect heart attacks remotely, something no current consumer wearable can do, which would open up a massive addressable market. Super true. A strategic plan for this company here is, instead of fighting for insurance coverage immediately, Heartbeam plans to launch Q1 2026 via concierge cardiology, which is like, targeting wealthy people who want some premium monitoring. All makes sense there. Very easy to understand thesis, but it was a little bit sketchy to want to hold this one overnight because of that. Just because their runway was so low, and I figured they're going to be selling shares into the market as soon as possible. And I think that's what we were seeing here on the 15-minute chart. You can see all these times that the ticker just dumped. But once we really were holding this area, I got really bullish, and I was ready to go. Except I got chopped out here in this action. I acted like a day trader again, and I sold basically everything in the 150s. And missed the rally. So very embarrassing. I had two strategies conflicting in my mind, and I ended up getting shaken out. And this is why I actually have different brokers for different strategies, because I like to log into a broker and be like, this broker means investing, this broker means day trading. Otherwise, it's so, like, I used to day trade, and in a portfolio I also invested it in. It was in an IRA, and I would like sell my investment so I could quickly use bigger size. And it all ended green, but it made me trip over myself a lot. And one lesson I learned is, separate your strategies. That took me years to not just learn, but actually commit to in real life, right? It's easy to be like, I don't really need to do it. I know not to do it, and I'll just not do it, but then you do it anyway. So, look at this price action, right? Beautiful first stare, beautiful second stare. The breakout on the second stare is not nearly as nice as the first one, but the price action on this ticker is just flawless. And I'm sure they're dumping shares right now like crazy. But if we just go to, this critical price zone, which you mapped out on the weekly chart, you can see, there's going to be some big support probably around 270, and maybe we'll bounce back up there, and maybe we'll retest these $4 zones. But you just got to be careful. When these multi-day rallies are over, they can end quickly, because before you know it, you're dumping a lot of shares into the market where the company is, and the ticker just falls off a cliff. So that's what I would be a little bit nervous on, and that's probably why I can't get back on BEAT, Heartbeam Inc. Myself. That's what I'm worried about, because I've seen these tickers drop 70-80% in intraday action, and it's just not pretty, especially when they're getting halted on the way down. Now, this ticker actually held some of these rallies in the past, and that actually is a bull case to maybe consider buying on these larger pullbacks. Let's see, this pullback was like 50%, so that's only a 30%. So maybe something around this more support zone, that's like a 50% pullback there, and look for a dead cat bounce at least. That's still a 30-40% move. So there's different ways to trade this one. It's hard to say. We've been seeing some really nice things, like with Open, for example. Also small cap, and just really holding its highs. 1600% move right there. That's what we like to see. This is a weekly chart, and so on a daily chart you could see that beautiful front side trend. It's just when those things break, you could see here it had a classic break. So let's go back to BEAT. It broke below our trend lines. That's when you got to get worried. So here's where the bulk of our trend lines are. So maybe something around $2. Now, this is not financial advice. This is just me analyzing in my head as a trader where can be some pivot zones, where are some really obvious support and resistance. I like really obvious stuff. I don't want to be fumbling around with like, maybe right now it's gonna have a small little, move back over here and above VWAP, which I don't know, might be somewhere in this area right now at like 3.5. That's not really what I want to do. So that's a little bit of a breakdown. Now, there's something else I'll just wrap up with, and that is the SAHM rule, which could be a bit of a lifeline now for Beat, because let me share what is happening with the interest rate. So right now, unemployment rate, as you guys know, has increased, and now it's even a little bit higher. Do they have the latest on here? Yeah, okay, that was for November. So this is the one that just came out. We had a big increase in in unemployment rate, which means the real-time SAM rule recession is going to be spiking. Now this one has not been updated. This is missing an update, and it will have a very, very solid spike. And I'll just really quickly here, I wrote it down so I don't forget and get too off topic again, start ranting. SAM rule is a fever check for the whole country's economy. So just like a doctor checks your temperature to see if you are sick, experts check how many people have jobs to see if the economy is sick, right? Now the magic number, and this is where the the SAM rule comes in, if the number of people without jobs goes up too fast by a specific fever point, let's say 0.5%, the SAM rule says the economy has a cold, called a recession. So 0.5%, guys, that's what we want to be watching out for. And guess what just happened? So here's the high fever report. The new report on December 16th showed that more people are without jobs. The rate hit 4.6%, which is the highest it's been in 4 years. And it had that huge increase, roughly 0.5%. So the warning bells are ringing because the job numbers rose so much. The SAM rule is now ringing a loud warning bell that the economy might be in trouble. So why does this matter? Because when this bell rings, the Fed sometimes acts a little bit more quickly, and I wouldn't be surprised if we got a continuation of lower interest rates. These low interest rates are also good for companies like BEAT because then they could raise more capital at lower interest rates. Now, I don't know if a few percentage points are going to save BEAT in its capital, but it definitely will make small caps in the Russell more likely to have these multi-day moves. And I'm very bullish on the Russell because it is also breaking out right now. Let's just go here to the Russell. Where is it? There it is. Had a huge breakout at 2.5, and I hope to see this one continue higher from here. I think we'll see a nice move over 2.6 into Q1 2026, and I think we can get a really, really nice market moving forward. Anyway, guys, if you want to learn more about what I'm doing, you check out tradejournal.co. That's where I document all of my trades. Right now, there's a awesome Santa Claus early discount. And if you want to not trade because it's too much work and too time consuming, check out Winkler Capital. This is where I can take on outside capital and invest it for you. We got the best rates in the industry. I'm not just saying that. We don't even have a management fee. Very attractive. Get in contact. Just click the contact button and you'll hit me up on WhatsApp and we can chat. All right, guys, that's all for now. See you next time.